This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, December 23rd, 2014. Euro dollar. So the market remains under pressure into the end of the year, with the focus now on the 2012 base at 120.40 further down. Ultimately, the downtrend remains well intact, with only a break and close back above the 50-day moving average to compromise the bearish outlook. Sterling dollar. Cable remains locked within a bearish consolidation just off the recent 2014 low at 155.41. A break and close below 155.41 will open the door for the next measured move downside objective down towards the 152.50 area. Ultimately, only back above 158.26 would compromise the current bearish outlook. Dollar yen. Dollar yen looks poised for bullish resumption after recently stalling out by 115.50, with the market looking to put in a higher low by this level ahead of the next major upside extension to fresh 7-year highs beyond 121.85 and towards the 125 area further up. Ultimately, only back below 115.50 would compromise the bullish outlook. Euro Swiss. Euro Swiss is currently attempting to put in a base after recently breaking out above previous support now turn resistance at the 120.45 area last week. However, a close above this level would be required to confirm the bullish outlook and open the door for fresh upside. Inability to close above 120.45 will still keep the pressure on that major barrier below at 120. Aussie dollar. Aussie dollar continues to extend declines and remains under intense pressure to the downside, with a focus on the next key psychological barrier at 80 further down. Ultimately, any rallies in this market should continue to be very well capped, with only a break back above the previous 2014 low at 85.41 to compromise the bearish outlook. Dollar CAD. Dollar CAD is in the process of consolidating recent gains, with a focus on the next key measured move upside objective at 17.50 further up. Ultimately, any setbacks in this market should now continue to be very well supported by previous resistance turn support in the form of the previous 2014 high at 14.67. Ultimately, only back below 113 would compromise the bullish outlook. Kiwi dollar. Kiwi dollar continues to struggle with any gains above the 20-day moving average, and the overall pressure in this market remains to the downside, with the focus on an eventual break below 76.09, the current 2014 low, and towards a measured move objective at 72.85 further down. Ultimately, only back above 80.35 would compromise the bearish outlook. S&P 500. The SPX 500 continues to push to fresh record highs, with the market now focused on a push towards the next major psychological barrier at 2100. At this point, a break back below 2010 would be required to alleviate immediate topside pressures. Gold. Gold is locked within a consolidation largely defined between 1131, the 2014 and 4-year low, and 1256 further up. A break above or below each side would be required to open the door for the next major extension, while an inability to take out 1256 does keep the medium-term pressure on the downside and a focus on a potential retest of that 1131 low. That's all for today.